Good morning, everyone. You should be able to hear and see the screen okay. All right. Yeah, just had a little trouble sharing the screen, but I think we're good now. All right, so let's get started. Today we'll try to stay to bigger time frame opportunities. I know we always drill down to the smaller time frames, but and I'm sure we'll do some of that today. In fact, we may start out with that, but we'll try to stick to bigger picture opportunities. And of course, for those that are new to FX Street or to these webinars, make sure you go back and review some of the recordings. At the end of the day, right, just a quick little kind of review and intro for new people. My name is Sam, and at the end of the day, the most important thing for any short-term trading for income, long-term trading for wealth, the most important two things to be able to do in the market are predict market turns and market moves in advance with a very high degree of accuracy. To do that, we need to figure out, where prices are going to turn. Well, what causes prices to turn? What causes prices to turn is a price level where supply and demand are very much out of balance, right? A price level where demand greatly exceeds supply is where prices are going to stop falling and turn higher. A price level where supply greatly exceeds demand is a price level where is a level where prices are going to stop rallying and turn lower. If we can identify that picture on a price chart, that's what we're looking for. So that's exactly what we do during these webinars. Okay. Specifically, who has the account size to cause an imbalance like that, right? Well, or to cause that size of order flow? Banks and institutions, banks and financial institutions. Right? So what we want to do at the end of the day is simply find that picture of demand and supply, and then find opportunities where those supply and demand levels are far apart from each other. So what this really all boils down to at the end of the day is fresh supply and demand levels and significant profit zones. Another way to say that, price levels where you have lots of buy orders or lots of sell orders, and where those levels are, you have lots of room in between. Make sense? Fresh levels and significant profit zones. For example, if we take a look, we're looking at the Swiss here, and I guess we could really just start with the Swiss. It's totally fine with me. Okay. If we, instead of having to explain all that stuff on a black chart, why don't we just make a white chart, 10-minute chart. So looking at this chart, we have kind of an ugly supply level above. I'll kind of draw it in anyway right here, right? Here's the origin of that drop, and we do have price going all the way up into here. Okay? So, and after this, we'll get to some bigger trend points. So there's the fresh supply zone above. We might get a little conservative and move your line down, but anyway, that's where we would have it. Okay. So take a look at the screen. So there we have the supply zone above. Where's your nearest demand zone below? For those of you that have been with us for a while. Where's your nearest demand zone below in the screenshot you're looking at right now? Or is there one? Yeah, Nick, maybe a little something here, but we've already kind of been down there a little bit. But yeah, they're really, there's a pivot low here. That's not demand. When you read the trading books, that's a support level, but we would never expect prices to stop there. Right, exactly, Selmo. There isn't one. You don't have any significant demand just below. Okay. So you've got supply above, somewhat fresh supply, and no demand below. What's the path of least resistance in price for the Swiss franc? Lower, right? So for those of you that can literally keep it that simple, you have a good shot of doing very well at this. The challenge for most people is keeping it that simple, really just focusing on fresh levels and significant profit zones. We can go to any market, by the way. I was just going to start going through the list like I always do. But if you have a market you want to look at, I'm totally fine with that. So take a look at the dollar here. Let's start with the dollar, or let's we just did. Let's we just started with the Swiss, but let's move over to the dollar. We see the dollar has keeps turning at our levels. Here we've got our 81 supply with a really strong 81.50 supply above it. But notice prices are sitting here at 80.78. It's a dollar index. So be careful, because the dollar just the other day got up to the 81 and fell like a rock. So what does that tell us about the supply-demand equation at 81? Probably a significant imbalance up there. Lots of sell orders, right? Banks are selling quite a few dollars up there, or have a lot of dollars to sell. All right? They haven't sold a lot yet. We know that because of what the price action told us. Okay? Our demand is not till just about 80. And this is from the daily perspective. But intraday, there'll be other stuff. But so just keep an eye on these levels for the week until the next time we talk. Just remember, 81 on the supply side, 80 on the demand side. So for trading the Swiss, the euro, some major currencies against the dollar, you certainly want to know where that dollar is, right? So when they're reaching those opposing levels at the same time, that's a pretty high probability event. Okay. And again, for those of you who are new, where a lot of this is coming from, I started on the institution, the bank side of the business, in the FX markets. Okay, I facilitated institutional order flow for banks, years ago. All right, and Sean, that's going to happen, because don't think when it leaves a level and comes right back like that it's a bad level. Remember, most significant banks make quite a bit of money. They're pretty consistently profitable, right? How do they make money? Right? Through trading and commissions. And when I say trading, they're not, most of the time they're not saying, hey, I think price is going to go from here to here, so I'm going to get in. It's right? But I think you get that whole point. I don't want to go down that path, but right, when you have the orders, when your job is to facilitate the order flow, and you have client orders, you're a market maker, right? You can kind of put all those pieces together, and you can trade your own account. It's pretty hard to lose money. So what I'm saying is, if a bank has orders to sell up here at 81, believe me, prices are going to have to come back there. Okay? And if you see them staying there for a little while, don't let that scare you. The more orders that can be filled up here, the better for the bank on the trading side, and the better for the bank on the commission side, right? Remember, if you want to trade like a bank, you have to think like a bank. Okay? If you want to beat the system, you have to become the system. All right, let's take a look at the other markets. Yeah, the first person wanted the euro, or someone said the euro is dead. Let's take a look. I know there hasn't been too much to look at in the euro. It hit significant levels and then turned, and there hasn't been a whole lot since. But if you take a look, the area that's kind of caught my eye is, there's a couple of them. First of all, if you look in the big picture, okay, Notice the euro where it's at now. We've been down to this area a number of times. Even in the past week, we've been down here twice. Now, when you look below that, you're not going to find any significant demand until just under 133. And it's not because of this pivot low, it's because of what caused this pivot low, the origin of the demand right here. This is the next nearest fresh demand zone below current price in a larger time frame in the euro. The area that demand is in, the area that the euro is in right now, first of all, we wouldn't even call that demand. Second of all, we wouldn't be calling it fresh demand, right? So if we look above, we see we do have some supply around 137, but if we go down to smaller time frames, I think you're going to see that, I'll take a look. I'll try to move the chat box here. Let's go down to some smaller time frames. We're just taking some X-ray snapshots of this market. I was looking for something closer to current price. I know what I'm looking. I know what I have here, but so once you get up to the you know, 136.15, I'm going to just put both these areas together. 136.15 to 25. You've got a little area in here and then a really nice level here. You have to have your stop about 136.30. I go down to, all I'm doing is I'm taking that little area right there, which is 15, combining it with this one. So we've got two levels just sitting here on top of each other. Okay, now when I put it in fresh territory, I'll see prices get above 13. So we can get up to like 15. Remember, normally we don't do this, so, but I am just combining these two. They're so close. With a stop at 30. Perfect. There it is. Now, if you want to just stick with the fresh supply level, that's your area with your stop above right there. Now I know it's, we're not close to that price yet, but we're also not that far, right? We're less than 100 pips, and that's nothing. So that's a nice little area. With the ability, if you put your lines at the fresh level, you're only risking about 10 pips. But again, go back to the beginning of our conversation. What's the more attractive thing? What's the real attractive thing about the opportunity of shorting euro? Is it this perfect supply level up here? No, not exactly. It's the fact that you don't have much below. It's the very significant profit zone. The only problem with 136 is that we've spent so much time in that area. See how long price spent here? Look home. If supply and demand was so out of level at that price level, price never would have stayed there for that long. Make sense? So now another thing I can do is when I go to, let me bring this chart up. So there's that level. Now if I put this on a larger time frame, or even larger, you can see we're looking to short right in here, which is kind of in that daily area. Of course, the real juicy area is up here. But again, look at what's below. Because price keeps stalling out where it's at right now, down here, it creates the illusion that there's lots of demand and support down here. Remember, the average person who is your competition thinks, wow, price keeps bouncing here. Not only is this level strong, but it's getting stronger. That's what people think. That's what every trading book says. The reality is the opposite, if you understand order flow, right? Every time price comes back to a level like this demand, what's happening to the demand here? The buy orders. Are they, increasing or decreasing? Well, they're decreasing. So, you know, the next big move, and that's what this session is about, is more likely down to the 133 area. Okay. And I think that's the big point there. So you've got a couple low-risk places above to potentially take a position for a move down to. We're going to put demand right here. So just below that that last pivot low. And I'll show you how we'll do this with the target for those that are new to the sessions. So that comes in at 130, hold on, 133. So we'll make the target a blue line. So 133.30 for the target. Okay, makes sense? The reason why we want to take profits before we get to the demand zone is because we never want to take profits at the opposing level. We want to take profits just before the opposing level. The reason is because, you know, at this demand zone, you know, what is the definition of demand or supply? Competition to buy and competition to sell. So if we're short and we have to buy back our position, we don't want to buy where there's competition to buy. We want to buy when there's still competition to sell. We'll have a much easier time getting filled. Okay? That little concept will, you know, really help with your winning percentage. So remember, you know, if a market or a chart kind of looks dead or like nothing's going on, okay, you know, if you look a little deeper, there's always, you know, you can always figure out where the next turn is likely to be and what the next big market move is likely to be. If you just dive in a little bit. 133, we would not consider that fresh, Drew, but since prices just touched that level and took off, there's probably a lot of buy orders sitting there, right? And you want to go just below the pivot low, literally a pip below the pivot low. We would consider that fresh demand, yes. Okay, let's move on. Canadian's the next one that's kind of obvious. So we won't need to spend too much time here. So big picture, remember we really look at the small time, well, we often look at the small time frames. Big picture, I'll put these in real quick. We've got some nice big picture levels below and up top. All right, so watch that area there. And then above, we've got this whole area sitting up here. And we're going to drill down to smaller time frames and map all this out. All right, so if we're quantifying the larger time frame supply-demand curve in the Canadian, whoops, I'm sorry. That's what the chart's going to look like, right? There's that one. Now that's kind of the curve on a weekly. We'll leave that alone for a minute. When we take a look at the same, obviously same chart, same market on the daily, okay, it's really those same areas, but we see that the level above, you know, really not that fresh anymore. But it still hasn't been taken out. And again, if you look here, right, this supply level, price touched it and turned. This supply level, price touched it and turned. See how that works? So what's the next likely move in the Canadian, up or down? The most attractive thing in this chart is this whole pocket of nothing right here. That's what we want to play for, move through that area. Andy, yeah, we could probably go take a look at that. Okay, so we want to, this should be the thing on the chart that really jumps out at you pretty quickly. This 106, if you look at it here on the daily, see all the trading activity in there? It was just there for, weeks. What you'll find is, so I think, what you're asking is about this level right here. Yeah, so that's this whole area right here. The average person is going to look at that and say, wow, that's got to be a great level because look at how big it is, it's got to be a great level. The reality is most of the time, price is going to go right through that level like it's not even there. People are going to say, wait, this strategy doesn't work. That was the best level ever, and price went right through it. No, we expect price to go through that level. The chart's not telling us there's a big supply-demand imbalance there. Where I would expect prices to turn like on a dime, like a very quick, sharp turn, is this little thing right here. Right there. That's the origin rally. I would expect this is a quality level, not that. But most of the trading world looks at that the opposite of how I'm suggesting. Does that make sense? And again, don't take my word for it. Think the simple logic through. At price levels where supply and demand is most out of balance, you get lots of trading activity or very little trading activity. So that level comes in at 105.45 to pretty much about 105. Right? Remember, we're looking at a daily chart. So. Okay, so we've got that level down there. We come down to the smaller time frame. Let's do that. Here's our 60. Let me just pop that up real quick. Oh, we have some stuff to look at there, and not a whole lot. Yeah, nothing fresh that's close to current price. Otherwise, we would certainly talk about it. Yeah, on the curve. So good question. On the curve, it's fine. Because look down here around 105, right? Totally fine. All right, let's move on to another market. We can go to any market, really. Oh, the pound? Sure, we can go to pound. Sean, yeah, U.S. raising rates more sooner than expected. Yeah, all the talk of, yeah, I pretty much just ignore it. I'm trying to think of another way to say it, but if you chart the markets and especially chart the 10-year and stuff like that, the chart tells you exactly what's going on. I tend to believe the free market a lot more than people talking. In fact, I don't even listen to the talkers. Just focus on the charts. We'll look at the 10-year next. Is 168 a level? Probably just below it. You're going to find some demand down here. Remember the big time frame, pound has quite a bit of room above. It's got stuff it's going to run into. By the way, how many people have been with us since 2007, 2008? And that's literally how long we've been doing this. Everybody remember this trade? We have it in an article. If you look back in the articles in mid to late 2008, you'll see this trade that we set up here. Anybody with us that long? No? All right. And I remember it so well because we have a student in England, in London. His dad was just retiring, and obviously he had everything in pounds, and we're going over this, and uh, that time everybody's talking. We're all talking about trading, and he says he private messages me. He said, I'm worried about my father. He's got all his assets in the pound, and we're talking about all this room it has to fall, and so he actually hedged a lot of that risk by shorting the pound for his dad. So interesting. Anyway, that was a long time ago. So, but the pound is slowly, headed back in that direction, and is doing it with demand zones below. So, even though this may look high on the curve, there's demand zones below. Okay. Um, all right, let's take a look. Yeah, Drew, really any. Okay. So just keep the time frames kind of relative. Let's see, I'm just reading back here. Yeah, Sunil. So when you go with the 60-minute level, for example, if you have a 60-minute demand zone, but on the 2-minute you see a supply zone not that far above, that supply zone will probably cause prices to stop and maybe turn a little bit lower, but that should not scare you out of that trade from the 60-minute chart. Okay, ultimately, prices, if the next larger time frame supply zone is higher, prices should take out that 2-minute supply at some point, right? Now that may offer the trader that sees the 2-minute supply a shorting opportunity, right? Risking 5 to make 10 or whatever, but it shouldn't influence your trade, your decision from that larger time frame level. Okay, let's look here. So yeah, really sitting right down here, we've got a little bit of demand, and it looks okay because when you look for larger time frames, significant supply, we don't really have it until just above 169.20. Once you get into all this stuff over here, yeah, that's the stuff that there's some supply up there. Yeah, Drew, if you start counting one candle as supply or demand, then everything becomes supply or demand. Yeah, so the real level is right here. What happened here is, and this is kind of that flip concept. Did we ever go over the flip here? For those of you that were in my class that we did. So let me mark this off. Just because of where prices took off from, that's why we have to draw the lines like that. Remember, everything we do is very rule-based. When we're looking for, where banks are buying and where banks are selling, we've got some demand here. Okay, demand, prices come back. They've now took off. If prices come back down into this area, yeah, we could be a very interested buyer. Think about it. This is a big market, dollar pound, huge market, right? Okay, so the big market, dollar pound. Notice when price was here for hours, 1, 2, 3, 4, 5, for 6 hours, it could barely trade down into this level. And when it did, it was very quick and it shot up like a rocket. Why is that? Why is it that hardly any trading activity happened down here? What's the reason? Yeah, big demand, right? Huge imbalance. All right. Notice price was able to trade. Let me just show you the difference for those that are new. Up here, price was able to spend plenty of time. And even though there are some demand orders, some buyers left over there, price came back and filled some of them. In fact, it spent another 5-6 hours there, 5 hours filling buy orders here. So at the very least, we want to go below that low. Okay? But if you want to keep it really high probability, I would put it where the massive buy orders are, where they're likely to be right here. Okay. Yeah, FT, you talking about the equities? I know today's kind of a little issue with that. Same levels, and it looks like all the trading is still in June, right? If you look at the September, you're just going to find a bunch of dashes. Similar volume in different contract months lasts for, just hours, not even a day. Right? You'll see that volume switch pretty quick to the to September. Okay, makes sense? I'm assuming that's what you're talking about. All right, so watch that area in the pound. Because again, you don't really have any significant supply until you get up above 169.20. We have to put it where the orders are, Drew. So that's the key there. Yeah, any of the concepts we're talking about, we apply equally to any markets and any asset classes. Let's keep going. Let's look at the yen. I don't know there's a ton to look at in the yen. Well, that was a big move. Last 5 minutes. Maybe we spoke too soon. I was hoping for more of a rally. The yen looks like a great short. But now it's already fallen, so retail sales, that's right. I'm just pulling up I'll have to pull up the S&P here. So if you've been in the XLTs the last couple of days, or if you're with me yesterday in the mastermind community, as you know, we've been pretty bearish on the equity index market for two reasons. One, hit that larger time frame supply. Two, and equally, there's this big pocket of nothing below in all the big equity index markets. If you look at really any chart, right, what we're playing for is a move down through this type of area, right? So you've got all that above, and again, we would refine the level down at a smaller time frame, but okay. You got supply above and really nothing below. I don't know how much time we want to spend on the index futures, but some great opportunities there. True, just go look at a couple different time frames and make sure that the meat of your area is where there was very little trading activity. That's the key. Okay. And it should only take you maybe 2 time frames to figure that out. Gold is rallying, so there's some nice levels in gold above. Let me get you to a 10-minute chart. Maybe it wasn't a 10-minute. Hang on, I was just looking at them before our session. Where are those levels? Oh, higher. Yeah, there's stuff that's, yeah, we're not that close. Well, we're getting there, I guess. There's stuff at 75, and there's stuff at up here at 83. Okay. I know it looks far, but we're looking at a 30-minute chart, so you've got that. But also down in here, if you go to like I think it's actually a 5-minute circle. Let's try. Just going to put a horizontal line across the top, and we're going to scroll left. Yeah, this nice rally base drop. We love rally base drop right here. Let's go put that in. So we're going to start it right there, because notice the origin of the drop is right there. But for this, we need to put our stop above. Again, if any of this is confusing, go back and watch some of the recording, or if you you take that, the online class that we've been offering, all this stuff will make sense. So there's a reason for every rule, and there's not a lot of rules. So watch the 75 to 80 area, and then of course watch about 83 to 86. Yeah, it'd be nice to combine those two levels, but gold's $100 a point, and that's kind of a lot of points there. So, we can't really combine those unless you're okay with that much risk. But I probably wouldn't do that. You can do better. Okay, so watch gold. Gold is on the move. Oh, I said before we would take a look at the 10-year. So yeah, there's been some interest rate talk, but the reality is, we were saying when prices reach this area of supply, price in the 10-year is likely to fall, which means obviously interest rates are likely to go up. So that's all that's happening. In fact, we've fallen 2 full points. That's a big, big move, and there's room below. Okay, there's room below. Let's go down to a smaller time frame. And if you take a look, let me just skip all the way down to the. Let me get rid of somebody's old line here. Those are from way back. Let's put a line down here. Let's scroll left. Notice this. None of this is fresh demand, so we just follow our rules, go down. Okay, notice this. None of this is demand. Follow our rules, just go down. See what I'm saying? And I could just keep doing that and doing that. You're not going to find any significant demand anywhere close. So the point there wasn't to find the demand. The point was to show you there's nothing that close. So don't worry about it or focus on it. Okay. Back here. Euro, not doing a whole lot, right? We needed to move. Yeah, so Nick, good question there. Euro 10 years has room to fall. Shouldn't the ES rise? Not always, no. That doesn't always happen. Sometimes it does, but not always. So here's a Swiss. So Swiss came up to our level, almost. Anybody get in this trade? Anybody able to grab that one? Barely got there. Let's see, I don't know what the spread was at the time it got close to that. But falling nicely from that area. Again, why is it falling? Because there's nothing to stop it. There's no fresh demand. Remember, this is the chart we started with our session with today. Fresh level above, nothing below but profit level. What's the past of least resistance for price, right? All right, we'll leave that one alone. And let's take a look at, let's see if the S&P has anything going here. Oh, wrong S&P chart. Let's go to this one. Oh, yeah, we already looked at this. So, over the next week, this 180-minute or 240 or 60-minute chart, whatever you want to look at, larger time frame of the S&P, that's where some good opportunity is. Same thing with that euro. If we get a little more rally in the euro, well, the same opportunity there. And again, don't forget those two levels, the 80 and 81 areas in the dollar index, right? Let's see, Jason, I'm just reading back here. Yeah, so, you want the distance between your levels to be at least, I would say anyway, at least 3 times the size of the level you're looking at anyway, right? That tells you that you have at least 3 to 1 to your first target. Now, if you want to trade and take 3 to 1, if you look for 3 to 1 profit, make sure the chart is offering you 4 or 5 to 1 profit. Make sure the chart is always offering you more than what you're looking for, right? And then take what you're looking for, or even a little bit less, and that typically will help your winning percentage. So there's my email address, sseiden@tradingacademy.com. If you have any questions or comments or anything, certainly send me an email. Again, sseiden@tradingacademy.com. I know we're out of time here, but I think we found some decent trades. Again, you look a little bit deeper than that euro, you can figure out what's going to happen with a very high degree of accuracy. So thanks for your time. Thanks, FX Street, and we'll see you again soon. And we'll follow up on some of these trades. Okay? Have a great day, everybody.